Dear students, welcome to my presentation. So I am Vinay Kumar C, Assistant Professor, Department of Commerce. Subject Personal Investment Management to second year BCom students of SVS College, Bantwal. This is the textbook written by Teresa and Pereira. He is also the Assistant Professor, Department of Commerce, Government First Grade College. Dear students, we have discussed the earlier the investment avenues. What are those investment avenues? Under that, the one of the instrument that is money market instruments. That is also we have discussed, and also we have discussed the bank deposits and insurance deposits also. They are the different types of avenues for investment. So here also the another one more avenues, that is real estate. So as usually you are all are familiar with the agricultural land, and also you are come from the semi-urban land, and also you are familiar with commercial property, raw house, farm house, like that. There are several types of assets are available. Okay, these are the fixed assets which is sellable, and you can also invest the money in the form of agriculture land also. There are several banks, so they are going to provide the money for you, and also individually you can invest the money in the various fixed assets. So every investor must have some part of their portfolio investment in real asset. Almost every individuals and corporate investor invest in residential and office building respectively. Apart from these, the other includes. This is one of the option for the individual and as well as the corporate investor. You are having a huge savings and huge money. Okay, you can invest the money in the buildings. Okay, the building may be the commercial building. Okay, maybe it is a residential building also. Okay, the some type of flats that is available in the urban cities. There are numbers of these type of flats are available for 30, 40, for 50 to 60, 15 to 60, like that. The space are available, and you can also buy these assets. It is one of the good investment. So how it is good investment? Today you are spending 10 lakh rupee for purchasing a flat. So tomorrow, that means, and after 2 to 3 years, the price will be increasing. The value of the those commercial building, the commercial flat will be increasing, like that. That the return may be more. So that is the intention of investing the money in this type of building. Even though some people they are interested to invest the money in agriculture, yes, this is one of the opportunity. You have a good potential to get the returns towards the agricultural land also. That means how it is useful. You use the agricultural land for the purpose of cultivation. Okay, there are there are several types of cultivation you can do in the agricultural land also. Okay, so that type of returns you may be getting. Even though you can invest the money in the sites that is available in the semi-urban cities, even though in the some type of houses are also available, the called as a farmhouse. That farmhouse that is also useful for the purpose of horticulture. Okay, the people they are doing the horticulture in those farmhouse, like that. So it is a good opportunity for the investor to invest the money in this type of real estates. Anyway, you get the few information about these things. Another option, that is gold, bullion, and other precious objects. Right, this is the important investment avenue that the people they are always interested. Especially the women and especially the girls, they are interested to invest the money in the form of gold. Gold may be raw gold, or gold may be in the form of necklace, in the form of earrings, like that. There are numbers. Okay, so the precious items like gold, silver, even though the diamond is also the precious objects. And some artistic people invest in art objects like paintings, ancient coins, etc. This is also the good habit for the people to buy this type of precious objects. Anyway, this is also the one of the avenue of investment. Move on to the next topic, that is stock market securities. Earlier I told that this is one of the good investment avenue. So especially the commerce students, they are interested and they learned in the classroom. So what is these securities? The securities which is in the form of equity shares, which is in the form of preference shares, and as well as debentures and also the bonds. Let us discuss one by one. The first one is equity investment. Equity investment, the equity holders, they are always they called as owners, because 50% of the shares you are buying, so you may be the owner of the organization. Okay, that type of opportunities you are having. That's why the equity investments represent the ownerships. Ownership means shares in the profits and assets of the company, but generally there are no fixed returns. It is considered as a risky investment, but at the same time, depending upon the situation, it is liquid investment due to the presence of buyers in the stock market. There are equity shares for which there is a regular investment, liquidity is more. Otherwise, for stocks have less movement, liquidity is not highly attractive. So whatever they are saying towards this equity investment, but if you are choice the best organization and that means the best company, you can buy the equity share, definitely you are going to get the good returns. How can it is possible means, so as per the principles, whatever the returns comes to the organizations or company, that the returns will be given to the preference shareholders first and then to the creditors. Like that there is an option, and finally whatever the amount that is left in the form of dividend, in the form of investment, in the form of returns, that will be utilized by these equity shareholders. So that is the opportunity. For example, if you are investing in equity shares at rupees 10 lakh, okay, the return will be, you are expecting 5% will be the return, right? So 10% nothing but 50,000. See, so in other form of investment like preference share, the rate of interest is fixed. That is fixed of 6.5 is fixed, and for debenture 6.5 is fixed. Like that, the interest rate is fixed. So whatever the losses, whatever the profit will be getting by the organization, the return will be the same. But in case of equity shareholder, the return will be more than that 6.5%, right? So the risk is also more and also benefit also more. How the risk is more? For example, minimum return you cannot expect in equity shareholders, because only the company is getting the profit, then only you get the returns. If the company getting loss, you are not going to get the returns, because you are the owner. So you cannot expect, the company is in the loss, you cannot expect the return. So that is the situation. Okay, anyway, the equity investment is also the one of the option for investment. See, I am talking about preference shareholders. I told no. So the company or the organization, they are giving the preference to the preference shareholders first. Relatively, it is safer, and also it is guaranteed fixed rate of dividend mentioned at the time of issue. So even in situation where the company earns a negligible profit, the payment of preference dividend becomes a mandatory. So among the class of shares, preference shareholders are more of conservative buyers. It is always beneficial, especially for the investor, those who are looking at the minimum return. Okay, so I am investing 10,000 rupees. I expect the 5% will be the dividend. So definitely you are going to get those 5% of dividend towards your investment. So the rate of interest is decided earlier before you are investing. So it is always a risk-free investment. Another option, that is debentures. Debenture and bonds, they are similar, as well as this debenture or bonds, they introduced by government and as well as the private institutions also. This is especially for long-term investment option and fixed stream of the cash flow depending on the quoted rate of interest. There are considered relatively less risky. An amount of risk involved in debenture and bonds is depend upon who the issuer is. This is also the one of the safest investment in, especially in the securities market. Here also the rate of interest is fixed earlier. If you are showing the debenture after 3 to 4 years, I want my investment and as well as the interest, definitely the organization is going to provide the your principals and as well as your interest. So that is the one of the advantages towards the investments in debenture and bonds. Take it an example. If the issue is made by government, the risk is assumed to be zero. However, the investment in long run, the risk in terms of interest rate, risk in price risk. Suppose a person requires an amount to fund his child education after 5 years. He is investing in debenture having the maturity period of 8 years with coupon payment annually. In case there is a risk of reinvesting of coupon at a lower rate, interest rate from end of the year, at the end of the 5 year there is a price risk for increase in rate of interest at the end of the 5th year, in which the price of security falls. So in order to immunize the risk, investment can be made as per the duration concept. Following alternatives are available under debentures, that is one, the government securities, and second one is saving bonds, and third one is public sector unit bonds, and lastly debentures of private sector companies. So these are the various instruments towards the debenture. Move on to the next topic, that is mutual fund. Mutual fund, it is always one of the tension-free investment, and also it is a easy investment, because here the decision toward the investment is taken by the experts. So here what we are doing, so if you are investing 10,000 rupees in any of the companies, so mutual fund, okay, that company's experts, they taken those 10,000 rupees and they are investing those 10,000 rupees in different investments alternatives. Okay, so that means 2,000 rupees in one company, another 2,000 rupees in another company, and another 5,000 is invested in government securities. Like that, the investment alternatives are taken by those experts. So here automatically that diversifies the investment, and also a mutual fund is an investment only in debt, only in equity, or it may be in the form of a mix of debt and equity, and ratio depending upon the scheme. So in earlier investments, so there is no alternatives. If you are investing in debenture, only you are going to invest in debenture. If you are investing in preference shares, only you are going to invest in preference shares only. But the mix of debt and equity ratio, you may be expect in mutual funds. Okay, that type of mix of debt will be debt and equity ratio will be considered under a mutual fund. Here the benefits such as professional approach, that means I told now that the in an organization there is a financial experts, they are the professionals, they are taking the decision toward the investments. The benefit of scale and convenience, further investing in mutual fund will have advantages of getting professional management service at lower cost, which otherwise was not possible at all. Even though mutual funds can either be open-ended and close-ended, that means open-ended mutual funds refers to flexibility of time for staying invested or coming out of the investment anytime. So this is one of the important things, that is it possible to withdraw our money in mutual funds. That is possible in the form of open-ended. So open-ended mutual funds are always giving an opportunity to withdraw your money, whereas in close-ended, usually tax efficient with a lock-in period. The period will be fixed. In case of open-ended mutual fund scheme, mutual fund is giving an assurance to the investor, and that mutual fund will give support of secondary market. There is absolute transparency and investment performance to the investors on a real time basis. Investors are informed about performance of the investment. So this is one of the benefits to the investors. you always expecting that you need a good information about your investment, okay, because always you are afraid that is it my money will be safer. So that's why the information is too necessary. That information will be provided by the organization. What type of mutual funds may be? The mutual fund may be the equity oriented schemes, maybe in the form of debt schemes, and also some type of hybrid schemes. Hybrid schemes nothing but balanced equity and debt, and also the specific schemes are available. Okay, let us move on to the another investment avenue, that is derivative. So this is also the one of the biggest market in the world. So derivatives means indirect investments in the assets. uh, it is growing tremendous speed. The important benefit of investing in derivatives is that in leverage the investment and manage the risk and helps in doing speculation. Derivatives includes. So you are familiar with the financial terminology like speculation. Speculation means you are buying shares at lower price. Okay, so and when the price will increase, immediately you are going to sell those shares to the others. So that type of speculation you may be doing. The speculation may be in the form of buying less shares and selling to higher price, buying like that. So that is the there are some type of people are there called as speculators. They are doing this type of function. What are those instruments comes under the derivatives? So I told that the derivatives is a indirect investments. It is a one type of agreement, and also it is a one type of contract happens between the two parties or two organizations. The contracts like forward contract, future contract, option contract, swaps, etc. So let us discuss one by one. So forward contract. So now you don't have money. Only you are paying only the down payment. After the 3-4 years, not 3-4 years. It is should be a particular. It should be 3 years. Okay. So after 3 years, I am going to return your money with interest. So that is the mutual understanding between the two parties, and they are agreed for this contract. Okay. So that type of contract is called as a forward contract. So towards the forward contract, you are going to get the benefits by the buyer and as well as the seller. Okay, even though the future is also the one type of agreement, this is a very specific contract between the two parties. So you are agreed for the purchase or you are agreed for the selling of the products. Here the currency will playing the major role, because the transaction is took place between the two parties of different countries, like Indian currency and US currency, like, right. So today's the value of the Indian currency may be Indian currency for $1 is maybe the 72 rupees, no. So maybe it is increasing for 72.5 in next month or next day. So that is the difference between that 5 paisa may be the benefit for the buyer. So that type of agreement, that type of contract will be took place between the parties. Even though in options also there are some type of products which is available, they are also considered for this type of agreement. Swaps is also related to the currency translation. Anyway, derivatives is one of the biggest market. It is growing at tremendous speed in the around the world. So the people, you can also invest the money in the form of derivatives market. Thank you for watching.